The ancient saying goes, start small and dream large when it comes to beginning a business. An S corporation gives a business owner the chance by limiting liability, giving advantageous tax treatment while retaining ownership flexibility, allowing the company to develop. Let's not get ahead of ourselves and discuss this properly. This is how to start an S corporation. But hey, before we go on with our video, subscribe to Glory Investing Show to watch more videos like this one. Now without further ado, let's get into this. Before anything else, let's start with explaining what an S corporation really is. An S corporation, commonly known as Subchapter S of the Internal Revenue Code's first chapter, is a tax structure that combines the restricted liability of a corporation with the tax advantages of a partnership or LLC. An S corporation retains the restricted liability of a C corporation while acting as a pass-through business for tax reasons, said Nelly Ackhope, CEO and creator of CorpNet.com. In the same way that a sole proprietorship or partnership's earnings and losses flow through the owner's personal tax returns, an S profits corp's and losses pass through the owner's personal tax returns. An S corporation is not taxed at a corporate level. The owners and shareholders of an S corp are not taxed individually. As with a partnership, your business profits and losses are recorded on the personal income tax returns of your owners. Being a domestic firm, having no more than 100 shareholders, and issuing just one class of stock are all requirements for becoming an S corporation. Individuals, trusts, and estates are the only types of shareholders permitted. Partnerships, companies, and foreign stockholders are not permitted. By filing Form 2553, Election by a Small Business Corporation, to the Internal Revenue Service, eligible firms can become S corporations. Financial institutions and insurance firms are among the businesses that are not eligible. Each state has its own set of rules for filing an S corporation with the IRS. According to IBM Global Business Service study, the majority of S corporations, 87%, have less than 10 workers. The process of forming an S corporation is lengthy and requires the completion of numerous procedures. The first one is deciding on a company name. You must pick a business name that is accessible in your jurisdiction of incorporation in order to form a corporation. Each jurisdiction has a registry of incorporated firms, which you may use to see if your preferred name is already used. If you're worried that your selected business name is too close to one that's already been registered, go to an intellectual property lawyer. Then you need to list the company's board of directors. An S corporation is required by the IRS and state law to establish a board of directors. The directors must meet at regular intervals and record minutes for such sessions according to the regulations for keeping an S corporation. The new organization should select directors who are willing and able to meet on a regular basis and who will provide value to the company. After that, you need to pick a stock category. An S corporation must issue stock, either ordinary stock or preferred stock, to its shareholders. Choose the most advantageous stock structure for your company. After that, you need to create a draft of the Articles of Incorporation. According to state law, persons creating an S corporation must file Articles of Incorporation with both the Secretary of State and the IRS. The name of the corporation, the names, contact information, and share allocation of individuals establishing the business, the quantity of shares in the corporation, and the names of the board of directors are all listed in the Articles of Incorporation. In many states, the document must also have a declared corporate objective. Then you need to make a set of corporation bylaws. Corporate bylaws are a distinct document from the Articles of Incorporation that outline the firm's structure and activities. It also contains information and methods for the following. Directors are chosen, getting rid of directors, shares of the firm are being sold, meetings are held, right to vote, a director or official has died. The Corporate Bylaws Memo is one of the most crucial documents to have when starting a company. When forming an S corporation, several states require you to file this paperwork with the Secretary of State. You also need to obtain an incorporation certificate. After you've completed the necessary paperwork, you'll need to get a certificate of incorporation from the Secretary of State, which certifies that the company is legally formed. After submitting the appropriate paperwork, the procedure for receiving the certificate might take anywhere from 3 days to 2 weeks, depending on the jurisdiction. Next, you need to complete and submit the S corporation papers. You must file an election by a small business corporation, Form 2553, with the IRS after you've provided all required paperwork. This is the document that establishes your company as an S corporation. Next, you need to register your business with a registered agent. You'll need to file with the registered agent once you've received your certificate of incorporation. Every incorporated business is required by state law to have a registered agent who receives legal papers on behalf of the incorporated corporation. Any state and federal communication, as well as serving of process papers such as summons and subpoenas, are included in these legal documents. Your S corporation's registered agent must be based in the same jurisdiction as your S corporation. An S corporation offers minimal responsibility, tax benefits, and ownership flexibility to its shareholders. After you completed the processes to create an S corporation, you may start reaping the rewards. One of the reasons an S corp is so popular among small business owners is that it allows you to save money by avoiding corporation taxes and provides legal protection to its stockholders. Because this is a pass-through business, the main advantage of filing an S corporation with the IRS is that you avoid double taxes. The federal government does not tax a company that files an S corp. Instead, shareholders pay individual income taxes on any earnings that have passed through the firm, just as they would in a limited liability corporation or LLC or partnership. Because the profit is taxed at a lower rate than ordinary income, it is more beneficial to each owner. If the firm incurs losses, the losses can be used to offset any other income on the owner's tax returns. However, you should verify with the state where your firm is located because some states do not offer tax benefits and instead tax the company as a regular corporation. Another advantage of the S corp form is that it gives limited liability protection to each owner, which protects personal assets from business debts and legal issues. Money in your personal bank accounts cannot be seized in any court-ordered judgments if your company is sued. Another benefit is the ease with which you may transfer ownership without incurring adverse tax implications. Employees who get a salary from the firm might also be shareholders. S corporation owners, according to ACALP, can earn a salary as well as dividend payments from the company. This might result in a lower total tax payment, she explained. Why? This is due to the fact that dividends are exempt from self-employment tax. Furthermore, when calculating the amount of revenue that is passed down to the shareholders, the S corporation can deduct the cost of the salaries paid. One of the major disadvantages of the S corporation structure is the increased number of operational regulations you must follow, such as having regular director and shareholder meetings, recording minutes at such meetings, and executing continual stock transfer and record maintenance. Some classes stipulate that each officer and owner must be paid regardless of whether the firm is profitable or not. S corporations' records have also been known to be scrutinized more closely by the IRS. If a firm fails to fulfill the specific conditions for the S corp status, the privilege may be removed and the company will be taxed as a regular corporation. Well, that would be all for our today's video. Let us know in the comment section below what you think about the video and give us some valuable feedback. Don't forget to like this video and subscribe to our channel for more interesting content. And also hit the bell icon so you'll be notified each time we post a new video. Take care and stay tuned.